They lost $181 million this quarter versus $131 million last quarter. So record deliveries, but they're losing more money the more cars they deliver.
So that was financial analyst Gordon Johnson, and it's clear to see he's a big bear when it comes to Tesla stock in general. But with Tesla posting record earnings, record numbers, and the stock still falling, is this the end of the ride, and should you start selling Tesla stock right now? Well, I think this interview is quite relevant, and I did a bit of digging, and I'm going to share with you my thoughts in this video. But please bear in mind, this is not financial advice. I'm just a guy on YouTube who is seriously considering trimming his beard into a form of El Gringo mustache. If you are new here, please do subscribe and turn on the bell, and do me the kindest of kind favors by making sure that like button is turned blue. It would greatly help me out. If you want to support the channel, there's a Patreon link down in the description, and if you want to join the chat room for absolutely free for life, you can sign up with eTORO on the pinned comment. Sign up, deposit, make a trade, and you get free lifetime access to the ECOFIN chat room. Perfectly designed for traders. So in full disclosure, this video is actually recorded before the market opens on Wednesday, and Tesla posted record earnings for the first quarter in 2021. How much earnings, I hear you ask? Well, in one quarter, they actually had a net revenue of $438 million US. Now, to put that into perspective, the same quarter last year, they only had 16 million. So Tesla, that is some serious growth. Big pat on the back to Elon and friends. And it gets even better because year on year for the quarter, their sales are up 70%, which is a serious number in terms of growth. So again, big pat on the back. But with these serious growth numbers, why the hell did Tesla's stock price fall on this news? What did people actually want, and what did they expect? Well, on their earnings call, I think there's a few red herrings there, and it sort of freaked a few people out. And to be honest, I think I'm one of them. Now, when it comes to valuing Tesla, it's definitely not an easy job. At the recording of this video, it's flirting around the $700 US mark, and its market cap is currently around about $670 billion US, which is crazy for a company that some say is not even really profitable. If you look over the last 12 months, the stock is currently up about 350% from last year at this time, and that is a crazy figure in itself again for a company which is valued so highly. If we go on some old school fundamentals here, simply Wall Street's crazy algorithm values this at a fair value of $125 US. So simply Wall Street thinks this stock is way overvalued and is due a correction anytime soon. But that probably comes down to their crazy price to earnings ratio. Tesla's price to earnings ratio has actually fell and become a little bit better. It's currently riding around 900 PE. If you don't know what price to earnings is, well, we've done a video on it. You can go check that out. But in layman's terms, the closer to 1, in theory, the better value. Now, I know there's probably some keyboard warriors out there going, well, that doesn't include the serious growth of Tesla. But even with their year-on-year growth calculated in, their PEG ratio, again, close to 1 being better, Tesla's current PEG ratio is around about 30. So definitely, even if you go on that, not good value right now. So if we go on the old school way of valuing a stock in terms of fair value, well, it's not looking too good in terms of a Tesla bull case at the current price. Now, at the beginning of this video, I shared a little clip from Gordon Johnson, a financial analyst who is a clear bear on Tesla stock. It's clear he's been a bear for a long time, and he doesn't look like he's going to change his mood anytime soon. Now, if you're interested in watching the full clip from Gordon Johnson, it's a couple of minutes long, and it's going to be at the end of this video. So if you are a bull or a bear on Tesla, I strongly recommend at least having a look at it, because it's always good to get counter arguments even if you're a bull. Now, looking at Tesla's earnings, let's have a little breakdown. Tesla earned $438 million last quarter. Now, by now, it's probably no secret that they sold 10% of their Bitcoin stake, which brought the company $110 million US. And if we look at the master of coin himself, Elon Musk, he said that the only reason he sold 10% was to prove the liquidity and the thesis that Bitcoin could be an alternative means of holding cash. Whether I agree with that, I don't know, because Bitcoin could easily crash as well. They also made $500 million from regulatory credits and grants. If we take out the regulatory credits and the Bitcoin sale, Tesla lost $180 million last quarter, which is actually $50 million more than the previous quarter. Now, if you think about it this way, the company is recording record sales and it's losing more money year on year. Now, I know they've got projects, they're opening gigafactories, they've got expenses and things like that, but it doesn't really bode well for me in terms of legitimacy for a good company, because if you're continuously burning money and you're lowering the price of the Tesla cars themselves, it's denting your bottom line. Your company's burning money fast. Why not stop lowering the price of a Tesla, at least for now? Now, on regulatory credits, I know people are going to be foaming at the mouth already, saying this is the name of the game. And Tesla, basically, if you don't know what they are, they sell these regulatory credits to other companies who don't have enough of them to meet their criteria, and that's how Tesla cash in some of that extra cash. But with the old ICE companies moving more and more into EVs, like VW, BMW, GM, Ford, they've all got EVs coming out. It's only a matter of time before they don't need to get these regulatory credits and they start taking this revenue stream away from Tesla. And again, if you just take away the regulatory credits, is Tesla even profitable? No. So this is the really big concern for me in terms of long-term goal. If Tesla continue lowering the price of a Tesla and continue burning cash at the rate they are, and regulatory credits do disappear, which they definitely are going to in some way, shape or form, then how is Tesla going to survive as a car company? Now, I know there's probably somebody sat there going, Tesla is not a car company. But it is, because it's losing even more money from its solar and all its other avenues. Tesla is only making money in any way, shape or form from its automotive industry. And again, Mr. Johnson has something to say on its other businesses, and you can check that out in just a second. So in my opinion, Tesla is overvalued. I've been saying it for months. I know Tesla's gone up and people have been, you don't know what you're talking about, because you do get things wrong sometimes in stocks. That's the way it works. But if you're buying Tesla right now thinking it's still going to double, it might well double, by the way, in full transparency. Not financial advice, don't kill me in the comments. But if you're a value investor and you're looking at buying Tesla, I think you're absolutely out of your mind. And yes, that goes for Cathie Wood and all the other hype players. I don't really care too much for hype plays in general. Now, for me, I love Elon Musk. I think he is the Einstein of our generation. And to be honest, I actually love Tesla. I actually drove one a couple of weeks ago and I love the product itself. I couldn't bring myself to buying one, of course, because that would be crazy in this part of the world. But I do like the product and I think it's got a bright future. But I think it's trying to run before it can walk. And I think that the biggest problem Tesla faces is it hasn't really got its identity. It needs to come out and say, we are a car company with other businesses, or we are a tech company that sells cars. And it's sort of a bit of no man's land right now. And the reason I'm saying it needs to come out and say that is because then we can sort of analyze where its revenue is coming from. Because the new investors who are coming into the market, they're a little bit confused. They see all these shiny objects Tesla's doing and they think it's a safe, legitimate play. But reality is, Tesla's going to need to raise capital. If the regulatory credits disappear and they continue burning cash, they're going to have to sell more stock. And if they have to sell more stock, it's going to crash the price and throw in a market crash that we're overdue in a recession. Well, I think it's going to be a big bad play for Tesla, to be honest. Plus, if you throw in that ICE companies are making electrical vehicles like there's no tomorrow right now, I think Tesla's market share is going to dwindle fast. Now, I could be completely wrong, and I'd love to know your thoughts down in the comments, but I think that Tesla posting record numbers is a little bit ambiguous in the fact that they're burning cash faster and faster and faster, and that they are only profitable with regulatory credits. Now, another little concern before I let you have this little video is Bitcoin. Bitcoin took a bit of a hit recently, and if it continues falling, which is very, very possible with cryptocurrency, then Tesla could report a massive loss there, and I wonder how the stock would reflect in that terms. So I think it's very worth watching the Bitcoin price to Tesla sort of correlation there. If Bitcoin falls 20%, for example, I think you might see a decent drop in Tesla stock too. That's just my personal thoughts, of course, not financial advice. If you haven't done so already, why haven't you hit that like button or dislike button? Honestly, don't really care at this point if you're watching this far. Anyway, enjoy the video from Mr. Johnson himself and let me know your thoughts down in the comments. Take care. Peace.
Right. So I just want to highlight, if you look at Bloomberg estimates, Tesla missed both on the top line and bottom line. So I don't know why everybody's saying they beat. They actually missed on the Bloomberg estimates. But I mean, so once again, right, again and again and again, every quarter, this is the fifth straight quarter, excluding credit sales, that Tesla has lost money. In fact, if you exclude the one-time credit sales, the one-time sales associated with Bitcoin, they lost $181 million this quarter versus $131 million last quarter. So record deliveries, but they're losing more money the more cars they deliver. So they're selling more cars, but they're cutting prices significantly to lose money. And another thing I think is important, look at their other business segments, right? In their solar segment, their gross margins were negative 20% versus negative 8% last quarter. They are not winning in that segment. And then if you look at their energy segment, where, Chamath has said they're going to be a utility, 13 straight quarters of negative gross margins. I don't know what people are talking about when they say this isn't a car company. Their other segments are losing significant money. And if you take a step back, their free cash flow fell by $1.65 billion. They're now excluded when you take the capex they shift over to cash flow from operations. They're now burning money again. I don't know what Gene is saying when he says these numbers are small, the credit revenues and the sales of Bitcoin. They did about 400 million in revenue, but when you exclude those numbers, you're talking about almost a $200 million loss in a record delivery quarter. Listen, Tesla is burning money. This is not a viable business model, and they're losing share in Europe and China, and their sales in the U.S. were down. So for a company that trades at almost 20 times sales and 119 times earnings, you need to see growth, and their sales actually fell sequentially. So this is a bad print across the board. And to say that the long-term outlook is good when the numbers just keep getting worse and worse, we just don't understand it, Gene. I mean, you got to, at some point, look at reality. FSD, they delayed it again. They just delayed FSD again on the conference call. So you got to look at reality.